When it comes to recent stock market news, China always seems to be on the mind. As the CCP continues to clamp down on high-tech companies that use sensitive consumer data to drive their businesses, Cathie Wood has divested from most of these Chinese holdings because they expose ARK Invest's funds and their investors to increased regulatory risks. Over almost this entire year, we saw Cathie Wood exit many of ARK Invest's biggest positions in Chinese stocks, like Baidu, Tencent, KE Holdings, Alibaba, and more. But very recently, a different kind of fiasco has started in China and is affecting economies all over the world. I'm talking about the Evergrande crisis, which many people are comparing to the collapse of Lehman Brothers in 2008. So in this episode, I'll give a quick overview of what's happening, what we should be keeping track of while the story continues to develop, and how Cathie Wood's holdings have changed during this initial dip. Your time is valuable, so here's the bottom line up front. I do believe that this is just a dip, but it may put continued downward pressure on stocks with a lot of direct exposure to China, either through financing or manufacturing. Since I'm always fashionably late when it comes to covering world news, I'll keep this overview short and sweet. I'll also provide additional resources in the description below and enable timestamps for your convenience in case you want to skip right to the stock talk. So let's get right into it. Evergrande is one of China's largest property development companies, employing over 200,000 people directly as well as millions of subcontractors. They mainly build and sell apartments to middle and upper class people, and they own more than 1,300 big projects across over 100 different cities in China. The first thing you need to know is that the Chinese housing market is very different than it is here in the US. Property isn't owned by people in China, it's leased from the government for decades at a time. These land leases are then purchased by property developers like Evergrande, who will then design apartment buildings and pre-sell them to regular investors. Those investors put down a deposit of as much as 50% of the price and wait for these buildings to actually be completed. The second big difference is that the value of these properties is very high compared to the incomes of the people buying them, so it often takes an entire family to save up for these huge deposits. Between that and the high population density of urban Chinese areas, real estate has become one of the only things that most people in China really invest in. So, while this average Joe who just put his life savings down on 50% of an unfinished apartment building waits for it to be finished, what is Evergrande doing? Well, they're either using that money to pay for the construction of these pre-sold buildings, or using that money to secure more land leases from the government and pre-sell more buildings. That makes sense, right? Well, the real estate in Chinese urban areas has been appreciating at over 10% per year, so Evergrande decided to acquire as many land leases as they could, which means securing more big loans from more big banks and other financial institutions, as well as ramping up these pre-sales of apartments that have yet to be built. Well, fast forward to this time last year, when the Chinese government started introducing new laws around the amount of debt that real estate developers could take on, and regulating how money from these pre-sales could be used. These regulations were called the 3 red lines, and they basically dictated the asset to debt and cash to debt ratios that these real estate developers could have. The same kinds of ratios I always talk about when I look at the balance sheets for the growth companies that I cover on this channel. In addition to the 3 red lines, some Chinese cities went as far as to ban real estate pre-sales altogether. As a result, Evergrande was forced to hold on to more and more properties for longer and longer, as well as reduce their pre-sale prices to attract more new buyers, which lowered the value of their properties, which made it harder for them to borrow money from banks, which means they had to attract more new buyers by continuing to slash prices of these pre-sales to keep the money flowing in, which creates a vicious cycle. And of course, they can't just sell off some of their buildings at a massive discount to service this debt, since that would by definition lower the value of their remaining buildings, which means they'd have a harder time borrowing money, which means they'd have to keep slashing prices, and so on. So, fast forward to today, and that's how we get headlines like this. Evergrande gave workers a choice: lend us cash or lose your bonus. The Chinese property giant owes $300 billion and is on the hook for as many as 1.6 million apartments. It may owe tens of thousands of its employees money, too. When the troubled Chinese property giant, Evergrande, was starved for cash earlier this year, it turned to its own employees with a strong arm pitch. Those who wanted to keep their bonuses would have to give Evergrande a short-term loan. Some workers tapped their friends and family for money to lend to the company. Others borrowed from the bank. Then, this month, Evergrande suddenly stopped paying back the loans, which had been packaged as high-interest investments. Now, hundreds of employees have joined panicked homebuyers in demanding their money back from Evergrande, gathering outside the company's offices across China to protest last week.
都让狗给吃了吧？老百姓那个钱容易吗？我们把我们家所有的财产给2套房都卖了，说在你们恒大买房，你们恒大是5块钱，把我所有的血汗钱都给骗过了，骗的1分钱都没有了。
Remember those big loans from big banks I mentioned earlier? Well, once China's most prolific property developer, Evergrande has become the country's most indebted company. It owes money to lenders, suppliers, and foreign investors. It owes unfinished apartments to homebuyers and has racked up more than $300 billion in unpaid bills. Evergrande faces lawsuits from creditors and has seen their shares lose more than 80% of their value this year, going from $2 per share to well under 40 cents. This backlash also puts the spotlight on other property developers in China. Who are they borrowing money from? Will those banks now pull out? Are their property prices going to crumble? And will they be able to finish the projects that they've started? The combination of Evergrande's creditors not getting their money back and increased scrutiny on the credit lines extended to other real estate developers is how you get the Evergrande contagion effect that the news is currently talking about. And like all contagions, the $300 billion question is, can it be contained? And that brings us to the comparison between Evergrande and the collapse of Lehman Brothers, who found themselves in the same kind of vicious cycle about 14 years ago, except with mortgage-backed securities instead of actual apartments. To be honest, I'm not the right guy to tell you whether or not this is a true Lehman Brothers moment that could reshape the world's economy. I know, you're shocked. I don't really think that any one YouTuber has the answer, if there even is just one answer. But if you're looking for other great videos on this story, I've linked a few of them in the description below. Here's what we should remember about the Lehman Brothers and the financial crisis of 2007 and 2008, and why I'm still comfortable buying stocks on dips like this one for now. Lehman Brothers didn't crash overnight. Their stock took over a year to crumble, from May of 2007 to September of 2008. Once they finally capitulated in September of 2008, that's when the market really tanked because Lehman was at the center of a pretty big web of bad debt, to say the least, just like Evergrande appears to be today. So if we look at the one-year chart of Evergrande stock, ticker symbol EGRNF on the OTC markets, it's been falling hard over the last year, just like the stock for Lehman Brothers did. I'm not a financial advisor and this is not financial advice, but in my personal opinion, this Evergrande collapse doesn't seem to be currently causing the same amount of widespread damage as the collapse of Lehman Brothers. If we look at the Dow Jones over that same one-year time period, we can see that Evergrande isn't really dragging it down the same way that Lehman did during the financial crisis starting in 2007. What I will say is that companies that rely on China heavily for manufacturing or have serious exposure to China's economy in other ways could see more dips as more bad financial news comes in from the Evergrande story. From that perspective, Cathie Wood selling out of ARK Invest's biggest Chinese holdings earlier this year seems like a great call, or at the very least, great timing. Comment below or tweet me at ticker symbol U with your thoughts on the Chinese markets, Evergrande, and whether or not you think its collapse will result in a big correction here. Is this ongoing story changing your opinion on certain stocks that you hold or that you are thinking about buying? Are you starting to hold more cash as a result? I'm excited to hear your thoughts. Also, thanks to the thousands of people who responded to my surveys on YouTube, Twitter, and Patreon, asking how you feel about this market-wide dip associated with the breaking of this Evergrande story. I really appreciate your engagement, and I like seeing that almost 90% of the people that are watching ticker symbol U understand that bad news unrelated to your direct holdings often presents a short-term buying opportunity, and that many of you have the confidence not to check the market every single day. I'm still working on that one myself. For the 10% of you that think that red days mean underperformance, do you feel that way because you're close to retirement, or are actively looking to exit certain positions for one reason or another, or maybe you've already deployed your entire cash position? Either way, I'd be happy to hear your thoughts in the comments below, or on Twitter at ticker symbol U, because knowing my audience makes me a better presenter. In my opinion, based on ARK Invest's latest trading data, it appears that Cathie Wood also believes that Evergrande's effects on the American markets will be fairly limited, because she bought the dip that Evergrande created earlier this week. So let's look at that data and talk about what she bought. This is a table looking at the changes in ARK Invest's holdings for all 6 funds combined, from Friday, September 17th, which is the day before the Evergrande news broke, to Wednesday the 22nd, which is when many of her positions rebounded. Each row is one stock. The rows are sorted by ARK Invest's total position in that stock, and each row is colored by ARK Invest's percent change in share count in that position. So we're looking for the darkest green rows. Also note that this third column shows you the change in share price at the time of this recording. Here are Cathie Wood's biggest buys in ARK Invest's highest conviction positions since the Evergrande news broke earlier this week. Their position in Teladoc, ticker symbol TDOC, grew by almost 5%, or $100 million. Their positions in Coinbase, COIN, Roku, ROKU, and UiPath, ticker symbol PATH, grew by over $50 million each. Those are the same stocks that Cathie Wood has been buying aggressively all summer, and I've done a deep dive on each one of them. If you're interested in those deep dives, I've put them together in one convenient playlist for you. I'll link that in the top right-hand corner of your screen right now, and in the description below as well. The other big purchases in ARK Invest's top 20 positions include Zoom Video, ticker symbol ZM, Invitae, NVTA, and DraftKings, ticker symbol DKNG, after it dipped over 10% over the last few trading days. Each one of these buys represents tens of millions of dollars invested over ARK Invest's 6 actively managed funds combined. If I sort the data by Cathie Wood's biggest percent increases in share count instead of by position size, many of the stocks I just covered are actually some of ARK Invest's biggest buys overall. Let me highlight Teladoc, Coinbase, Roku, UiPath, Zoom Video, DraftKings, and Invitae again, so you can see them in context of all these big share count increases. It's not often that we see so many top positions also get the biggest increases. In my opinion, that shows that ARK Invest's 5-year outlook on these companies is slowly but steadily increasing over time. Outside of these massive positions, they also purchased a lot of Signify Health, ticker symbol SGFY, Robinhood, HOOD, SomaLogic, SLGC, Vuzix, VUZI, 3D Systems, DDD, Genius Sports, GENI, Markforged, MKFG, Personalis, PSNL, and Kratos Defense and Security, ticker symbol KTOS. I've talked about most of these companies fairly recently as well, but let me call out the genomics and advanced healthcare companies specifically. Since earlier this year, I talked about Cathie Wood rotating out of these stocks, and now it appears that she's starting to rotate back in. Signify Health is an end-to-end healthcare platform for managing bundled payments for various care programs, from diagnostics to hospitalization through recovery and care at home. It currently sits in ARKK, ARK Invest's flagship innovation fund, and ARKG, their genomics revolution fund. But in my opinion, Signify Health could just as easily sit in ARKW and ARKF, ARK Invest's advanced internet and fintech innovation funds respectively. Teladoc sits in all 4 of those funds as well, just for some context. SomaLogic is a proteomics company that focuses on biomarker discovery and clinical diagnostics. Their platform is really good at looking for thousands of these biomarkers simultaneously, with high specificity and sensitivity, meaning high rates of true positives and true negatives. Invitae is a genetic diagnostics company that offers gene panels and single gene testing for a broad range of clinical areas including hereditary cancer, cardiology, neurology, pediatric genetics, metabolic disorders, and so on, so it's pretty core to ARKG. Personalis is a provider of advanced genomic sequencing and analytics solutions to support the development of personalized cancer vaccines and other next-generation cancer immunotherapies, so they're a company that focuses on building the tools and processes to improve every part of the value chain for next-generation gene sequencing. Now that you're basically a doctor, let me know in the comments below if you want me to spend more time covering big global financial events like the current Evergrande story, and whether or not you want me to focus more on the stories themselves or on ARK Invest's trades around them. To me, the most interesting part is always what the best money managers like Cathie Wood, Michael Burry, Ray Dalio, and many others are doing when news like this breaks. But I'm always happy to take a step back and cover more of the stories themselves if that's what you find helpful. Either way, I hope you found this episode helpful in catching you up on the basics of the Evergrande story, how it's similar and different to the collapse of the Lehman Brothers in 2008, and what trades Cathie Wood has made so far as a result. If it was helpful, consider liking this episode and subscribing to the channel with all notifications turned on. That's a great way to invest in the channel that invests in you. Thanks for watching, and until next time, this is Ticker Symbol U. My name is Alex, reminding you that the best investment you can make is in you.